Do you constantly struggle to manage your finances? Is your desire to be financially stable? What about an early retirement? Well, my name is Isaac and my goal is to get you into optimal financial health regardless of your age. So in this video, I'll detail financial goals that all nurses should achieve at every age. So if this sounds like something you're interested in, make sure to like this video, and if you want to see more content like this, make sure to subscribe to the channel. Hey, without further ado, let's get into it. So I want to first start off by talking about why setting financial goals is the most crucial aspect of your financial health. Having goals are crucial in determining not only how you view money, but they will determine the trajectory of your life. When it comes to financial goals, this could be the difference between retiring with millions or working paycheck to paycheck for the rest of your life. So you want to first visualize how you want your retirement to look like. Are you vacationing for half the year with your spouse? Or do you see yourself buying a massive piece of land in a Nashville suburb? Don't limit yourself. These are your big goals. Don't worry about how you're going to achieve them. Dreaming big is the most crucial step when creating your bigger goals. From there, you'll want to break down these lofty goals into more short-term, achievable goals. Now, as a disclaimer, I'm going to ram the word goal down your throat until you actually start setting some financial goals for yourself, so be prepared. So the reason why I'm so obsessed with creating goals is because it keeps you accountable. Hey, you might be a spender or a saver. Anyone who is a spender knows how easy it is to get off track sometimes. Actually, putting these goals on paper or maybe even creating a cute wallpaper on your phone with these goals will make you more apt to stick to your budget. Setting those goals will also allow you to start seeing progress. Every time you send in some extra money for that student loan, you'll get a step closer to paying off debt. And we all know that debt is the greatest hindrance to building wealth. Now, some of you may have just caught what I said and been like, well, debt is good. Well, I'm not talking about taking out a loan for an asset like a rental property. I'm talking about liabilities like a car or, God forbid, a luxury bag that you had to take out a loan for. Ultimately, setting these kinds of more achievable goals will help you see what you need to do right now, as well as show you where you want to be in a month, a year, or 5 years from now. So how do you manage these goals? Annual financial planning allows you to review these goals, track your progress, and update them if need be. Whether you're in your 20s, sitting inside your first apartment, or you're in your 60s and just paid off your home, you always need to create and act on good financial goals at every stage of your life. Now, one of the best ways to maintain a strong financial portfolio is to adjust your money habits with every decade of your life. Each decade of your life is new and requires a different financial approach. Adjusting according to your financial needs in each decade of your life and setting the right financial goals can help you become financially stable and achieve the retirement of your dreams. So we're going to start off with what you should be doing in your 20s. Although not much may be expected of you, this is the most crucial time to put yourself on the right track. It is during this time that you form money habits. Your first priority should be to invest in yourself. At the beginning of your career, as you start establishing yourself at your workplace, take advantage of personal growth opportunities, professional development courses, and skills training. This will not only benefit your career, but will also enhance your professional value. Things like professional development classes, being involved in unit practice councils, and becoming certified in your nursing specialty are easy steps you can take during your first few years as a nurse. Ultimately, taking these steps early in your career can help to increase your earning potential for the future. The next thing you want to focus on is building credit. You may already have a credit card, but now it's time to make sure you're actively building your credit history. Your credit history helps determine your credit score, which in turn determines the worth of your credit when applying for rental housing, car loans, and mortgages. This goes without saying, but the higher your credit score, the better your chances are of getting accepted for loans. Paying off your student loans and credit card bills on time are absolute essentials for building good credit. Also, another key is not to max out your credit limit. Now, if you don't have a credit card yet, make sure to check out the links in my bio, as they'll direct you to the two cards that I own, which are the Freedom Flex by Chase and the Southwest card. These are absolutely amazing cards that work in tandem, as the Freedom Flex gives you 5 times points on rotating categories throughout the year and 3% back on drugstores and restaurants, while the Southwest card gets you 4 free upgraded boardings, tons of points through your sign-up bonus, and so much more. Next, you'll want to save roughly 20% of your income every month. This can be used for anything from investment opportunities to car repairs to financial emergencies. It is also a smart idea to establish an emergency fund, as this will help you to avoid getting into major debt in times of need. And I never forgive myself if I forgot to mention investing. Guys, we're going to want to invest a significant portion of the money you've set aside to save. I can't stress how important it is to start your investing journey early. My focus is on investing in stocks and crypto, and I highly recommend that you start researching how to invest. I have a lot of stock market related content on my channel, so be sure to check out some of those videos after you finish here. Now, I touched on this earlier, but you need to start start repaying your student loans. Most college grads leave with tens and sometimes hundreds of thousands of dollars in student loan debt. Once you have a steady income, your priority should be to get your student loans under control. A loan counselor can definitely help you set up your repayment plan. Some of you may have high interest loans, so it is important to pay off those first. As a side note, make sure to make payments towards the principal first and not just the interest, because this is a common tactic used that will cost you thousands over the lifetime of your loan. I also encourage you to see whether your hospital or institution offers a loan forgiveness program. I know of several hospitals back east that would pay your student loans as long as you committed to working for their hospital for several years. The minimum I have seen is a 5-year commitment, but let me know down in the comments if you've seen this offered at other hospitals and what the requirements were like. Now, I have a colleague who prioritized paying off her loans with her first 2 years of working as an RN since they were high interest loans. That may not work for all of you, but is definitely a wise choice to make, especially if faced with those high interest loans. Personally, my rates are extremely low, so I've opted to pay off my nursing school debt over the course of 20 years. What may really help you is talking to a financial advisor and figuring out a way to pay off your student debt. Now, probably the biggest goal of your 20s should be becoming financially independent. Many adults in their 20s still rely on their parents financially, and hey, that's fine. If you're getting free or discounted rent, don't be ashamed to spend a few more years at home if that means paying off your debt and realizing your financial goals that much sooner. Not to mention, it is an amazing feeling to be financially independent and even move out and live your life the way you want to. Now we'll move into the next decade, and that is your 30s. You partied it up, and now it's time to get to work. In your 30s, you start to see some financial stability and can start approaching your finances from a different perspective. For some, this is a time to build upon the foundations you set in your 20s, while for others, hey, it's never too late, and your 30s are a great time to focus on finances and begin building wealth. By your 40th birthday, you should be close to getting rid of all your debt from student loans, car loans, and all other debts except your mortgage. Focusing on debt repayment now will free up your income so you can use it more effectively in the future. Next, you'll want to allocate money to your family if you have one. Not all people get married in their 30s, but if you did, you'll need to adjust your budget accordingly. Does your spouse or partner have a steady income? What are their financial goals? It's important to make sure that your goals are similar, because the way you spend, save, and invest will depend on both of you working together to achieve those goals. Consider whether you want to have a joint or separate bank account, and have a conversation with your spouse regarding how you'll split expenses and so forth. Maybe you're ready for a kid as well. In the most ideal situation, try to have enough extra income to support raising a child. During this decade in life, it's vital to set aside an emergency fund. Put enough money into your emergency fund to cover 6 months of income so that if you lose your job, have a serious medical problem, or get into an emergency, you can still pay the bills and manage expenses. Be creative with this emergency fund. I know most people will tell you that your emergency fund should sit in the bank. Well, my emergency fund is split between multiple sources, including my bank account and brokerage account, where my money is making me more money while it sits. I know people who store their emergency fund in the form of valuables such as watches or precious metals. Regardless, make sure to safekeep this fund and don't touch it unless you have an emergency. The last financial to-do in your 30s is to continue saving for retirement, or start saving if you've just begun your career. Even if you're left with a very small amount per month to be put towards retirement, start saving early. It's never too early to start saving when it comes to retirement. Starting early and investing more into your retirement will definitely help you achieve your goals that you created in the beginning of this video that much more quickly. And when I mean saving for your retirement, I really mean investing for your retirement. Consider investing in a Roth IRA, which, by the way, I recommend getting as soon as you have the means to, or investing in real estate. Now we come to your 40s. This is the perfect decade to start thinking about your long-term financial goals. The steps you've taken up to this part of your life will help you prepare for retirement. Even if you just started to set financial goals in your 40s, it's not too late to make these life-changing decisions. At this point, your mortgage is most likely your biggest debt, and one that you can increase your payments towards. An easy way to repay your mortgage faster is to pay one additional mortgage payment per year on your principal amount. With a 30-year loan, this could save you tens of thousands of dollars in interest and cut your mortgage by several years. Also consider refinancing your current property and using that money to put a down payment on a rental property. The goal is for this property to pay for its mortgage via its renters, so that by the time you hit retirement age, this will be a form of passive income for you, not to mention the tax advantages you acquire through owning additional real estate. Your 40s also include peak earning years and are a great opportunity to improve your skills and salary. Consider pursuing additional certificates or skills that can enhance your resume and increase your worth. If you're a nurse, maybe you're ready to pursue a nurse manager role or an advanced advanced nursing degree. Make sure to be on top of current pay in your industry for your amount of experience, and either ensure that your current employer is paying you what you deserve, or look for another job that will better compensate you for your experience. Another thing you'll want to do in your 40s is to increase your retirement contributions. Until the age of 40, it is recommended to save 2 to 3 times your salary for retirement. If you put money into retirement by this time, you should have enough to save around 15% of your income. But if you're just starting to save, you'll need to put more aside to catch up. Start diversifying your retirement investments, such as investing more in real estate like I mentioned earlier, or investing in stores of wealth such as watches or even rare minerals. Next, you'll want to get life insurance if you don't have it already. Now, if you're watching this and are a new grad nurse, look into getting a life insurance policy now. But if you're in your 40s, you aren't too late. In fact, it's time to start thinking about how you would provide for your family should something unexpected happen to you. Taking out life insurance ensures that your funeral expenses are covered and that your spouse and children have access to your assets in the event of a mishap. Ultimately, it secures the future of your loved ones should something ever happen to you. Now, I have a very detailed video all about life insurance and different policies you can choose from, so I highly recommend watching this one, and I'll leave a link right here above. Now we're getting into your 50s, and this is a great time to put more towards your retirement and to begin thinking about your long-term financial goals. In your 50s, retirement isn't a distant possibility anymore. It is a life phase that's right around the corner. It is recommended to have at least 6 times your salary in savings by age 50 in order to retire by the age of 67. Estimate your retirement goal and narrow down your plan to get there. This is one of the most monumental decades in terms of financial preparedness. Now is the time to think about reallocating your money, and if you're investing in stocks, one option can be diversifying your portfolio between stocks and bonds. Bonds are a safer investment choice but offer lower rates of return, but you still want to invest early in the decade and adjust to safer investments as you approach your 60s or retirement age. If you haven't taken out important insurance plans like life insurance and health insurance, this is a good time to do so. Invest in the right health insurance plan for you just in case any serious illness or long-term care needs. Don't wait until you need the insurance, otherwise you will not be entitled to it. You should have already started investing in life insurance by now, but if not, make it a priority as life insurance assures that the costs associated with your death or funeral are covered, which can otherwise become expensive. This relieves your family from extra burdens as well. By the time you hit your 60s, you're either approaching or part of the traditional retirement age. While you may decide to continue working, you may also want to have the opportunity to spend the rest of your life finally living out those goals that you set for yourself in your 20s. You also want to consider your personal and family needs as you plan for your last day of work. Now, this goes without saying, but before you can retire, you need to make sure you have enough money in your retirement savings to suit your needs for the foreseeable future. Some of you may have pension plans of 401ks, while others will have real estate providing them with passive income. This is when you should start to create a retirement budget. Stick to your savings plan and retirement budget when you finally call it quits at your job. Now, if you're short on cash but really want to retire, one option would be to sell some assets that you don't necessarily need, such as a piece of property. Obviously, there are pros and cons to this, so make sure to discuss these big decisions with your financial advisor. Once you're retired and past your 60s, you can commit to your legacy plan and work on revising your will. Your legacy doesn't have to end with your estate. Think about charitable donations, investing in an organization or initiative that is close to your heart, and other meaningful ways to spend your time and money. As your family and lifestyle change, continue to adjust your will so that all your assets are properly passed on. Anyways, that concludes my to-do list for every decade of life, starting from your 20s. Hopefully by now you've already begun the process of thinking of what you want for yourself in retirement. Hey, if you feel like I just made you a little more financially healthy in this video, do me a favor and hit that like button and subscribe to the channel if you're new here. And I want to end by reassuring you that no matter your age, it is never too late to get started with financial planning. I highly recommend conducting a financial survey at the beginning of each decade to assess your progress so far, reevaluate your goals for the next decade, and make plans to ensure that you achieve these goals. Hey, if you've watched it this far, I know you're committed to financial health, and I applaud you for that. I look forward to seeing you all next week. Peace.